Hi, this is Paul from globaltradingsoftware.com, and this is a Forex day trading for beginners tutorial, and we're going to start right at the beginning. This is Euro Japanese Yen. I'm on the hourly time frame because one of the first things we got to do is frame our chart for the day ahead for the trading. So where the price action is when we wake up, where the price action reacted to certain support and resistance zones over the last day or so, and then we can we've got that chart, that framework then to trade between those support and resistance zones using different types of indicators to give us signals and things like that. But the first thing we've got to do is frame that chart. So this is the hourly time frame. We have I've identified lots of different zones here. Now remember, on the hourly time frame, if we're trading off the 5-minute, the 3-minute or the 10-minute, the zones you put on here are going to be massive, so you've got to be very selective and look for those coincidences where we meet lots of pivots and to form a narrow zone, a narrow zone on that hourly time frame. So let's start over on the left. Remember, we have to look left. And I've highlighted why I've chosen these zones. So we've got a huge pivot where my cursor is just here. Huge pivot where my cursor is just here, which defines a big sort of resistance, and it turns around quite violently there. We get another test in there where the other ellipse is here. And then to define that top of the zone, you see how it pushed and went to go a little bit higher, but then rejected violently again. So that's the top of that zone. So we've actually got a zone bottom and top. And then we just carry that through all the way. Now, we're nowhere near that right now, but that could be our target zone, for example. Let's move down a little bit. On the next one, I've got a pivot here, top of this zone. Another pivot here on the top of that zone, really strong pivot there. And then for the bottom of this zone, I've gone on this other wick here, because again this could act as resistance for this current move up. Where are we next? We're moving down. We have some pivots here, but more importantly, I've got some recent pivots that gives me a high and a low of this zone here, because this is the one where I was trading earlier. This is the one where we got to push through for potential trade, and then lower than that, again same sort of method. We're looking for major pivots here, two major pivots here, another one here. This is defining our zone. Then send it out to the right. We also have another pivot here, here, send it out to the right. That's potential support. So we've framed the chart for the day. This is Euro Japanese Yen on the hourly. One of the most important things when we're Forex trading is we've got to have, the broker's got to give us the volume, so the amount of people that buy or sell in a given period of time. So on that, this is an hourly time frame, so we understand, we know the volume, because the volume is very important for when we're starting to manage the trade and understand that behavior. One of the other things that we need on our chart or by your side is where that economic data is. We're in the European morning right now. I'm seeing on my chart, and this is the trading view version, I've got at 11 a.m. this morning, I've got some major European data. This is the Euro Japanese Yen. It's going to affect this pair, so we need to understand what's going off there as well. If you can't get it on the chart and you haven't got trading view, look at other ways of actually identifying that those key data points in the economic calendar. So that's the hourly time frame. Now I want to go through the trade on the 5-minute, and we'll be using the day training bundle from globaltradingsoftware.com, the gold package for the day trading bundle for Forex, the Forex gold package, because this has the auto harmonic pattern, the xBratAlgo, the divergence cloud, and the EMA cloud, and then on top of that the very new the manager to manage the trade, because this is important. Anybody can get in a trade, and we've got some amazing tools to get you in that trade, but managing the trade is the one to maximize your profits consistently. So we're going to go through the setup for this. Now again, I'm on the hourly time frame to draw these zones. Now look at this bat pattern move between those zones. The bat pattern automatically completes in this with this D pivot in the automated completion zone, which is very narrow in this case, but that's a high probability resulting long trade, and that is what we're looking for. However, we know we've got some resistance up here with this channel. Okay, so that harmonic pattern is completed. Now, to complete in that completion zone, that's a very narrow zone, and that's automatic. And that zone is compiled of different Fibonacci extensions and retracements during that ABC correction, that initial correction there that starts to form that bat pattern. So to actually complete in that zone is very difficult, but when it does, the resulting long trade is high probability. But we need more confirmation because we're going into resistance here, and this is difficult because if we look left now and zoom out a little bit, this is quite a prolific sort of range that we've got ourselves in here. So we want to make sure we're out of that range. But this is where the day trading bundle for Forex comes in, because we've got that harmonic pattern, but now we're starting to get these xBratAlgo signals. We get a 4-star, a 5-star, and then a 6-star buy. So the momentum is building to the upside now. Then we get the divergence cloud confirmation, this green up arrow here. So we've got two signals. Well, we've got the signal from the harmonic and then 3 xBrat signals. So we've got 4 signals telling you to go long. But the part of this package is you don't go long until you get that confirmation. This divergence cloud confirmation is here. But again, sensibly, guys, you've got to go long when it breaks this resistance. So this is your entry here. Okay. I'm going to put that line there. That's your entry. Now, we've got resistance up here, so we need to understand what the risk to reward is for this trade. Now, if I've got a big zone like this and I've pushed through, my stop is going to be reasonably tight on this trade, just below that zone, around about there. And that's just the way I trade. Some people would go down below this pivot, but for me, really, it's tried and formed this bat pattern here, tried a couple of times to get through the resistance zone. But now we've got momentum going. We've got 4, 5, 6-star buys. We've got the volume picking up. We've got higher than average volume. We'll talk about that in a minute. All of these cyan dots above the candles here, pushing it through. This is a big move. So you can go tight on your stop here. Now this stop and this entry gives you an opportunity to work out your risk to reward. So what you're going to do is you are going to use your trend-based fib extension up here on the left, and there's 3 clicks on this. You're going to click first on the stop, the second on the entry, and the third on the entry, but when you've brought it across a little bit there. Okay, so what you have is a 1 to 5 to the next resistance zone. So the risk reward is fantastic. It's really, really good. So this, signal, confirmation, entry. That's 3 parts of the puzzle, but the most important part now is to manage this trade, and this is where the manager comes in. We have colored candles. Now, green candle is an accumulation candle, so that has more volume than the previous candle, and it is an up candle. The gray candle has less volume than the previous candle, but is also an up candle. We have cyan dots above, so that average for that volume for that candle is higher than average. So that momentum's building there. You see, so we're getting green and higher than average volume. We push through there. The blue dots underneath are lower than average volume, and these help to manage that trade. Then, when we get a red candle, so that's got high. That's a distribution candle. So we've got more sellers. We've got more sellers in there to, just selling that particular product. In this case, it's Euro, Japanese yen, and that's higher than average volume as well. So that red candle is distribution candle, but then that's a 1 candle wonder, we call it, because we've had a nice bullish move up. We get the red candle with higher than average volume. We get a rejection of about 50% on that candle, but the next candle is cyan, so that's a down candle, but it's lower than average volume. Also, our cloud is still green. We've got different settings on this one. This is on moderate at the moment. So this is our bias cloud, if you like. As long as that's green, we stay in the trade on a conservative management strategy. This pullback here, you can see how we're getting lower than average volume, so it's running out of juice. It starts to come back up again, and then it comes down again. You get two candles now, two red candles, higher than average volume. So this could be coming down. So the thing at this point here is to make your trade risk-free. Put your stop here, okay?
Stop, Bill.
This is your trailing stop now, so you're risk-free. Just you'll have to ignore those things. I've got other trades on right now. We have trading stop at risk-free when we start to get this, because why? The cloud is still green. Yes, we've got distribution, we've got higher than average volume distribution, but the cloud is still green. So this is telling me just go risk-free, protect your money, you're risk-free, see what happens. Look at this turnaround, and this happens quite a bit. Then we start to get some bullish momentum, higher than average volume, green candles. We're starting to push up now. Now this price action has beaten this next pivot here. So adjust your trading stop just underneath this pivot, and this is where you should be in this trade right now. What we're looking for now is a test of this resistance zone. If we get a test of this resistance zone and the profit for you is good enough, and you take the profit, that's fine. There's no set and hard rules. But for me, I want to use the manager. The manager is my trading brain, my trade management brain, if you like. So I'm looking at the behavior, looking at those rules, and in the description for this video there will be a link to the tutorial for the manager, which is very, very important, because you need to understand the rules with these higher than average volume candles or lower than average volume candles, accumulation, distribution. It sounds very complicated, but in this tutorial I make it very, very simple. Right now this current candle is accumulation. It's got higher volume than the previous one, and it's got higher than average volume. So right now this momentum is still to the upside, unless we get a massive rejection here at higher than average volume. So this is where this trade is right now. Now, one thing that we can do once we start to get to this resistance zone is move this stop up just below the cloud. Okay, we've got another pivot just here where we had a rejection on high volume here. This is where it's very important that your broker has volume for Forex, because we can see here we've got higher than average volume candle, and it rejected those lows and formed this hammer. This is a good sign that that momentum's continuing. So now we can place our trailing stop below the cloud, okay, and also below this pivot. So we're locking in more profit. So if you'd risked $1,000 right here, you know, we're locking in $2,800 right now in profit. So this is a good looking trade. We've got profit locked in. We've been sensible with the trade management. Now we're just looking for the manager to give us direction, what we're going to do, when we're going to get out. So, you know, if we now get you know, some big red candles with higher than average volume, we're going to get out. Right now looks like we're having a little pullback, but it's lower than average volume at the moment. We've got profit locked in with a trading stop. We've done this sensibly, and this is working out to be a good trade. So hopefully this tutorial has been helpful. Remember, when you're day trading, you need to frame your charts. Go back to the beginning of this video and watch how I do that. You do it on the hourly time frame, so you frame the chart for the day. And then you need signal providers. We provide some great signals, and the Forex Gold package with the Harmonics and the xBrat is probably one of our best selling products, because it works. And then add that manager to it to really get those consistent, maximize profits for each trade. So hopefully this helps. Don't forget to subscribe to this channel for updates on more educational videos and live trading sessions when we conduct them. Have a great trading day.